Had you bought $100 in pound USD, you would have made $700 in 4 hours. How? Range trading. And I'm going to break it down for you right now. My name is Mike, and I teach you how to trade right now. If you want to make money in the markets, stocks, currency pairs, and crypto, you come to the right place. When we think of financial markets, we think of trends.
During an uptrend, price makes higher highs and higher lows. During the downtrend, price makes lower lows and lower highs.
In reality, markets only trend 30% of the time. The rest of the time, markets tend to trade sideways, or what we call a range.
In a ranging market, price bounces off defined support and resistance levels, creating multiple buy and sell opportunities for traders.
What most traders will do is wait until price nears a support level and place a buy order. Then resistance acts as an optimal price target. On the other hand, when price falls to support, it's time to sell or short. The downside to ranging markets is confusing price movement. Buyers and sellers are indecisive, so as quickly as price goes up, it can go back down. Time is of the essence when markets move sideways. Eventually, markets will trend again, and I prefer to watch and wait until a break occurs. Let's head to the charts for an example. This is pound USD on the 15-minute frequency. This is a strong trend line because we count 5 wick touches of the downtrend trend line.
Shortly after the 5th touch point, price breaks out of the trend line to the upside before falling again. After bouncing off the trend line, the candles are quickly reversing in price, forming a support and resistance zone.
If you want to learn more about support and resistance zones, check out the video link in the description below. But I have to keep it real. This is actually a resistance zone, which isn't immediately obvious.
Ranges are marked by at least 5 reversals off support and resistance zones. As candles continue to close, we count 4 more reversals, which confirms our sideways movement. We're officially in a range. The top of the range is a resistance zone, and the bottom of the range is a support zone.
In ranging markets, price will continue to bounce between these zones. Sometimes price will close above resistance or below support before quickly rebounding, continuing that sideways movement. That is, until price breaks out. This is our opportunity.
In this instance, we count more than 10 touch points in a 24-hour period, which can make it difficult to time entry and exit. So I wait until price breaks and retests the range, which is exactly what happened here. We see a bullish momentum candle that breaks above our resistance zone. We're looking for a second, stronger bullish candle or a retest and rejection of the zone. We get the latter. Immediately, price retested our resistance zone with a wick rejection to the downside.
I could be conservative and wait for a bullish candle to bounce off the resistance zone or enter at the close of the wick rejection. I choose to enter now. I place my stop loss slightly outside of the resistance zone, and my take profit target is the 3rd support and resistance zone. Price immediately soars. In 4 hours, I've made $7 for every $1 invested, or a 7-to-1 risk-reward ratio. The break and retest was an opportunity to enter a new range-bound market, an uptrend to be more precise. Of course, this strategy works for downtrends too. Let's head back to the charts for another example. Do me a favor, if you're enjoying this video, like and subscribe below. Help me help you. Now, back to our regularly scheduled program. This chart is Bitcoin on the 15-minute frequency. Unlike before, Bitcoin was in an uptrend before price entered a range after the trendline breakout.
Once again, we establish our range only after we count 5 touch points between our support zone and resistance zone. It takes only 7 touches for price to break support. After a doji candle, which signals indecision, we see a big bearish momentum candle.
Is this our entry? If you're a breakout trader, maybe. Remember, you and I are break and retest traders. We have to wait until price retests support, which only takes 2 hours.
After a huge bullish candle, which shows a lot of momentum, and then back-to-back bullish and bearish candles, there's a huge bearish momentum candle back to the downside. This is our bounce off the support zone and signal to short.
I placed my stop loss slightly above the prior candle close, and my take profit target is the third support and resistance zone. It takes a little longer than pound USD, but the trade's profitable, marking a 3.3 risk reward ratio, or we made a little over $3 for every $1 invested. Sideways trading is so common that it's important to have a strategy in place. Because ranging markets have stable, predictable price action, you could buy at support and sell at resistance. That's simple, but it can be really difficult to time it correctly. Price reversals are so frequent that identifying the optimal entry and exit price to offer reasonable risk-reward ratios can be difficult. That's why I wait for the break and the retest. Price will never stay contained in a range forever. Eventually, price will break out of that range, leading to massive gains when the market begins trending again. Just remember to wait patiently for the retest. Then, enter. If you found this information helpful, all I ask is that you like this video and subscribe to the channel below. It takes 2 seconds and 2 clicks, and it means so much to me. Remember to check out my other videos, and thanks for watching.